we're right on time, which is a fantastic thing, and I'm going to ask Mick to come up on stage to introduce his session. Mick is the Partner Global Head of Insurance and Asset Management Practice for Oliver Wyman, and the panel discussions Insurance Transformation, Resetting the Agenda. Mick, off to you.
Good morning, everybody. My name is Mick Maloney. I'm a partner with Oliver Wyman. I lead our insurance, asset management, and actuarial practices globally, based in New York, and delighted to be here in Singapore. This is the fourth of these CEO panels that I've had the pleasure of facilitating. The first three were online, so it's a real pleasure to have the fourth be here in person. I'm joined by Bijan and Andres, who I might ask to come up and join me on stage here. We have a series of discussion topics that we're going to go through. I think we will have good time for Q&A at the end. So please, as we're going through these topics, do use the app to submit your question, or John will I'm sure, facilitate questions live as we're done. Andres needs no introduction and has, I think, teed up a very rich landscape of topics for us in his opening remarks. What we're intending to explore here, as you can see, is really this topic of industry transformation and resetting the agenda. And I think as we go through, we have plenty of material to discuss. But before we dive in, I did want to give Bijan an opportunity to introduce himself, give you a little bit of the organizational context for some of the remarks that he'll be making. Bijan.
Sure. Thank you very much. It's a pleasure to be here. I'm honored to be part of this panel. I head the Fairfax International. I'm part of the Fairfax Financial Holdings Group. It's a Canadian company. And we have insurance and reinsurance operations globally. Many of them, our operations are in Asia, including elsewhere, very large international footprint. And one thing that I'm hoping to be able to add is a difference in our operating model, which is decentralized. All the transformation models that we're talking about, we operate a little bit differently than other global insurance companies. So I'm hoping that in our discussions I can add a little bit more flavor as to what that means for our operations. I spent almost 23 years with AIG before joining Fairfax. I've been with Fairfax for the last 13 years. That picture of me is a little bit old. I need to update that. I get that.
You look better now.
But no, it's a pleasure to be here, and I'm very much looking forward for discussions. It is great to see so many familiar faces and also be able to shake people's hands and give them a hug after such a long time. So thank you very much for organizers for making this happen. Thanks.
Excellent. So let's, if we may, start with this idea of transformation hotspots in the industry. And I think as humans we always think that the current environment is more fluid and dynamic than any environment than we've had in the past. But I would say it certainly feels like that's the case. And I thought, Andres, in your opening remarks, you kind of covered a lot of territory there. But I think maybe if we could double click a little bit into two pieces of it. One is from where you stand, what you see as the real transformation necessities in the industry over the next 3 to 5 years. And then the second part of it, if you look at that through the lens of your own organization, where is it that you are really focused as you think about opportunities and think about scaling those opportunities? So maybe Bijan will go first with you and then go to Andres.
Sure. So I think a lot of the topics were covered in the two speeches that we all heard. But a big one for our industry, I believe, is technology. Not just AI, but technology as a whole. To understand that impact, I think we should look back before internet, before smartphone, before even somewhat computers. Our industry existed, but we adopted those technologies and changed the way we do business for better risk selection, for better customer service, for just making our business more robust and better. I think today the technology that is offered, whether it be AI, whether it be machine learning, whether it be all the other tools that are available, is giving an incredible opportunity to transform our industry again. But we have to be very careful how to use it. Because the technologies such as machine learning and AI, there's a lot of talk about this, but how does it work is a question mark for our industry. it can be used to better our services, better our risk selection, and help our people, both our employees as well as our customers. The other big area, I think, is the talent, because as these technologies evolve, the role of, let's say, claims manager or underwriter is changing. In the future, our underwriters may be data scientists, the computer experts, the IT experts. We are competing for those talents with many other industries. So who is going to be running these new ways of providing services for our clients? That becomes a big challenge for our industry, and we have to prepare ourselves that the talent that we have, how do we train, how do we maintain, and how do we encourage to be able to kind of expand their horizons within our industry. The other one that was mentioned that I think is critical is the geopolitical tensions that exist today. Our industry has benefited from globalization in the past 20, 30 years, obviously. As you can see, quite a few of our international insurance companies are de-risking from some of the territories for obvious reasons. I think the conflicts that are coming our way is going to change the shape of where globally can we do business or allowed to do business. So those three, I think, are the main areas that I think has a potential to substantially transform internationally how we do business going forward.
Andres?
No, I could make it very easy. I agree to all of the points. But I'll try to maybe bring a bit of reality and experience into the discussion. And imagine you're sitting in an air traffic control room, and you sit in front of your screen, and you see all the signals, the silent ones, the light ones out there, and then the ones that are becoming louder and louder until it's crashing. I think what we need to learn is to read the signals out there much earlier and to understand what do they mean for my organization. Because the problem is at conferences and everywhere, in particular big ones like WEF or so, you discuss mega trends. Everybody's agreeing. People go home into their offices and they need to translate it into practical actions, translate it into strategic direction setting that engages the organization. That's the difficult part. And the elephant in the room is actually us. We can't blame anybody else. It's us humans in those organizations, leadership, but also each and every one in the organization following a path. So I could say, yes, technology, AI, etc., but why do we have a problem with this? It's because continuously we were ignoring the importance of integrated technology. A lot of M&As happened. Post-merger integration was a problem. We still today see a lot of people in the landscape, in the insurance landscape, with plenty of systems with legacy, IT debt, technology debt. I always call it IT spaghetti, and this costs so much money to entertain. And the customer doesn't see the benefit. So maybe I'll stop here then.
Yeah. So if you were to give the industry a scorecard on how it's doing against the different areas that we've highlighted there, in terms of appreciates the issue is moving fast enough, down to appreciates the issue isn't moving fast enough, down to most folks I look at don't really see that as a big. How would you react to that against the areas you've identified, Andres?
What's the scale from 0 to?
Well, give it a 10 is doing really well, and a 0 is not doing anything.
I think we're not doing so well, and I say that because I want to create that sense of urgency also, the awareness that we have to do something and we have to accelerate. So at best, I would give us a 5 to 6. But with companies like Rob Schimmick's company, they encourage us to think along the same lines, to adopt technology, and to see what does that mean for my job families, my traditional job families in my company, to translate, the new data-driven world into my underwriting world, my claims world, etc. So maybe at best a 6.
Peter?
I agree. If you look at our traditional businesses and wanting to adapt or adopt the technology part of the change and transformation. But I would like to add this. For us at Fairfax, we have a couple experiments whereby instead of adding the technology to what we already have, we decided to do it ground up as a new one. And that's where the success is. That's where I say that I think we are very successful. If possible, let me give you two examples. In Lloyd's of London, we have a company, a syndicate called Brit. So a few years ago, they wanted to experiment with the digital approach to write business at Lloyd's. Again, traditional market. Looking at how we do that within Brit was creating the limitations that Andres was just mentioning. So what we did was that we identified what we didn't know, which is algorithm, real AI, those types of things. We're underwriters. And so we partnered. There was a discussion about the importance of partnering and having collaborations. So we partnered with Google, whereby they are really, really good at doing algorithm. We created a new syndicate. We call it Key, K-I, Key. And that syndicate is AI-driven, 100% digital. Every risk that comes to Lloyd's has an identifier number. So using that number, using the data from underwriting side, Brit, other data that's available, with that algorithm, we can basically give a response to the brokers about participating on the risk in a nanosecond. There, I think success is 100%. I believe first year they did $400 million in premium, and second year with the combined ratio less than 100, they're at 600 million or something like that. So my point is that some of the limitations is almost putting new plumbing on top of the old plumbing. You're always going to have a leak. Sometimes you need to separate and then kind of make the investment and do the technology-driven piece for our industry on a standalone. We also had a great success in India, whereby once we had our own license, we did a completely digital company. It's called GoDigit. It's a completely digital platform, no brick and mortar per se. Again, that has been a very successful model for us in terms of what we have expanded. Again, not trying to do something new on top of something old, but taking these opportunities that we have and creating a different organization that from ground up is based on that. That's where we see a lot of successes that happens. And the obstacles for not being able to do it properly from the legacy point of view, as Andres was mentioning, kind of gets eliminated. Those are our experiences in terms of doing it as a separate entity.
I think it's fantastic to raise those individual examples. I would also say that it has to be at the top of the agenda of the C-suite, or even the CEO agenda, because it requires a mindset shift. We have to acknowledge that insurance, reinsurance, and our industry at large, we deal with people, with data and information. But the way we process data is so old-fashioned. So we basically have to use the analogy of tech companies, software or tech companies, and think in data models. And I think as soon as we then realize that this is the direction, this will change everything in the company from to end. And this is a big undertaking. We've done this in our transformation because we had a distressed business, and we decided to turn around the business, but turning around just to make a portfolio profitable is not making you successful for the future. So we decided to create bionic organizations. So one part of the organization was purely focusing on turning around the portfolios, the expense ratios down, etc., traditional management tool set. And the second part of the organization, where the Chief Innovation and Transformation Officer, we didn't call it CTO or CIO or CTO, no, Chief Innovation and Transformation Officer, where all tech budgets, innovation budgets set, together with a strategy lead, created the new future model of our organization. And then you had both parts, basically. And now how do you get this new part into the traditional part? This is the painful transformation process, but I think you got to establish it once and then go on that journey and take the people along.
So you're making a case for top-down there, Andreas, I think, in terms of, I as CEO, look at my organization. Yeah, Bijan and I were talking about this yesterday, because I think Fairfax has a federated model, so it's a different approach to that, and the question is that model capable of moving fast enough? I think was something we were discussing. And also, if I can add a question there too, how do I size and understand whether I'm investing enough at what pace in doing it? And how do I make sure I have the resources to do that?
Sure. No, I think when it comes to technology and some of the things that we're talking about, it does require massive investment. It does require massive commitment. So, and I do agree that as a result, this is a discussion that at the leadership part of the companies must be on top of the agenda to be able to make those decisions, definitely. In our model, because we are decentralized, this becomes a bit of a challenge because we don't make a decision at the top level. All the decisions are made in our operating companies. So larger operating companies will have better resources to be able to make these decisions, use data, partnerships, and so on and so forth. The smaller entities in the developing countries will be limited. That's our challenge. How do we cross that gap? But that decentralized model also allows you, like I said, knowing what you don't know, so bringing the experts from other industries that can help. That can include investors. On the case of Key, it's not just us. We had other investors who decided that this is a good model and they invested in our approach. So I think our industry, there's a lot of talk about this, with the capital that's available in the marketplace and these innovative ways that we are talking about, partnerships becomes very critical, both from the investment side, the technology side, and what we know, which is underwriting, which is risk selection, and the data that's our industry has available. If you combine them, even smaller entities can have a competitive advantage. So in our model, which is different, again, we don't make a 100% top-down approach. All the decisions are made at the operating companies. So smaller ones, as I mentioned, will be a bit challenged for this. That's why they have to think a little bit differently and perhaps create other types of partnerships to close the gap.
So maybe we're going to come back specifically to this question of AI in just a moment, but maybe let's zoom out a little bit for a moment and think about this question of resource allocation against the global landscape. And by resources, I can mean capital, I can mean people, I can mean investment budget, and the global landscape being which geographies, what channels, what projects, what risk types, So give us a sense, maybe starting with you, Andreas, for how you are putting that jigsaw together over the next 3 to 5 years as Swiss Re.
Yeah, I mean, first of all, we agreed to have one methodology to assess market attractiveness, sizing markets, define the addressable target market. And this exercise on its own is already enlightening. So then you know exactly where are the interesting risk pools that we want to play in, and also where do we play today relative to those markets. So I can say that, I mean, as a global company, we're market leading on the reinsurance side. We want to be market leading as a specialized risk partner for corporates on the direct side. And in life and health, we are very large, if not number one in the world. So each and every business unit needs to define where they want to play. We have identified Asia for quite some time as a very attractive market, growth market. If you look at global growth, everybody was looking to, in particular, Southeast Asia as the territory where growth is happening in comparison to other markets. But I still believe even in the mature markets, and if you look at the protection gap analysis that exists, there's plenty of space to grow. We got to up our game there. In LATAM, it's an interesting one, but it's a complicated one. Africa is the next horizon. There was a wave where everybody was excited, and then it got complicated. but you've got to be committed to territories and not to step in, step out all the time. It is volatile. The world is volatile. We have to embrace volatility and manage volatility. So I gave you a bit of a ranking now, but at the same time, you continuously have to massage your portfolio. It doesn't mean that it's continuous growth. We had a soft market, so you have to divest again. You have to manage cycles. But clearly, Asia is probably the most attractive one and the most obvious one. Not the easiest one, but the most obvious one.
Again, our model is decentralized, so we do not dictate from the head office, let's say, in terms of which geographies we're going to be in, where we're going to concentrate. We are opportunistic. So the portfolio internationally that has been picked up, it is, we have invested in, it is in different geographies based on opportunities that has been presented to us, right? And saying that we have to be in X place or Y place. As a result, the strategies that each one of our companies deploy in different geographies are different depending upon the markets and opportunities that they see. Having said that, as an example, where we see growth is substantial, generally speaking, are in the areas that obviously insurance penetration is low, governments are business friendly, and there's a movement that the social economic change within the country, within the geography, is moving towards a norm whereby the demand for insurance obviously is gonna be increasing. Having said that, we see great potential in the Middle East and North Africa, MENA region. We invested through a partnership about 10, 15 years ago. Premium was about maybe 400 million gross premium. Today, they're running at about 2.7, 2.8 billion in 10 years, that kind of a growth we have experienced, with a combined ratio that is still in the mid-90s. As Andreas mentioned, the key is to have long-term commitment. This is not a short-term game. In and out is not going to give you the benefits that you want. You have to commit and kind of be on it for a long time. We see great opportunities in Latin America. Companies that we have there, they're all growing, they're all profitable. And also, given the change in the investment environment with the higher interest rates and stuff like that, the investment portfolio is also doing very well in some of these countries whereby interest rates, government bond interest rates in particular, are very, very high. We see Africa as a great potential, next wave. Again, we are opportunistic in terms of what opportunities may be presented there. One thing I want to mention also, for our businesses, we have to be mindful that once you have the geographic landscape, organic growth is a big driving force, especially, as Andreas mentioned, if you're on the right cycle, if the rate is right. Also, opportunities come whereby in many of the countries globally, the regulators want to reduce the number of insurance companies. They want to consolidate. That consolidation creates opportunity. You can enlarge your portfolio and create better efficiencies in terms of the cost and everything else. So I think from Asia definitely has a great potential, obviously. But outside of Asia, which is a big market, we see MENA region, Middle East, North Africa, LATAM, and Central and Eastern Europe as big markets whereby the business is underpenetrated and the social economic part of all of these countries that we operate in are beginning to move upwards, which creates a great opportunity for enlarged insurance potential.
And things you're watching in developed markets, I mean, Andreas mentioned protection gaps, and you comment on dynamics there?
Yes, so again, because we are decentralized, we don't tell our companies what to do. The management decides how to run the operations. And pretty much all of our management are local. We don't have expats. So their understanding of the market is very, very critical. The management teams that we have in old international operations have been there for many, many years. So the continuity and the long-term commitment is there. One of the issues that I see in our industry, international side, especially if you have expats, is that management changes your strategy. So the management is there for 3 to 5 years, they change, the new management comes in, focuses on something else, or the head office sees opportunity because of Asia, they say we want to do that in Middle East, it doesn't work. We try not to do that. We try to have differentiation whereby the management on decentralized model, over a long period of time, they can make their own decisions about where those gaps are. And each one of our companies, they have their own capital and they have a responsibility for their own P&L. So there's not a parent company sitting that basically is one capital. That also makes the decision-making locally to be better, because whatever decision management makes, it's going to impact their capital. So that's how they do the risk management in a little bit of a different way.
Okay, so let's come back around to this AI question, and let me tee it up a little bit, and then maybe you can start us off. But so I guess what I'd observe is AI is ubiquitous in terms of discussion at this point. I think it is a very rare organization that does not have a series of at least experiments running. Maybe if I could frame the question as two pieces. One, where do you see the most transformative potential? And then secondly, to relate it back again to the conversation we had, what do you think is going to be required to realize that? And I view Swiss Re a little bit as being, you know, if not ahead of the pack, Andreas, then I know you've had a partnership, for example, with Palantir for quite a while, who I view as kind of one of the leaders in the space. So it's going to be very interesting to get your perspective on this question.
Yeah, and you mentioned it. We transformed our business fundamentally. The way we do business is thinking in data models. So what we call an analytical data model. And yes, in partnership with Palantir, Foundry-based. But on top, our IP sits on top, and our analytics comes in, the risk insight that we gathered through more than 150 years. The problem is when you don't have this strong and clear data foundation, data strategy in place, you end up with many, or N use cases that are all nice. You experiment, people get excited, but you've got many use cases, and you create extra complexity. So for us, it was important to understand first, what's our data foundation, what's our data strategy, the ontology. We created new jobs, the data owners, stewards, and curators, etc. And then we said, and now let's use the data model, and let's add now AI. So we created only in Corso, in the primary insurance arm of the Swiss Re Group, we have 40 use cases. And they're mostly applicable in areas where we have large volumes of data at hand and at play. It's mainly claims. It's about document management in the underwriting process. It's mind-boggling how inefficient and fragmented document management, I'm talking about policies, wordings, etc., the industry works. And their AI can definitely help. So just two areas where we definitely have use cases, but the governance is a central one. And I think it's very important because AI needs to be watched. It's not just an opportunity, it's also a challenge. And I think that's why we have a central team that overlooks the whole governance, with then very clear use cases attached to the data model that we have.
Your view overall on the potential for it to transform the insurance one?
The challenge is that in our industry, we need to baseline somehow when we want to do productivity calculations. I personally believe, and we already see it, it's a booster in productivity. And this is something our industry needs. If you look across the years, we have been at best stagnant, maybe slight increases, but nothing in comparison to our customer base, by the way. So that's one area. But also, it's enriching the jobs. People shouldn't get worried about AI if that reduces the number of staff. Maybe certain jobs don't exist anymore, but the specific expert jobs will be enriched. So there's just a few aspects on Gen AI, but the investments are significant, in particular when you talk about the data foundation. That's significant.
Yes, I think it is going to be transformative for our industry. But if we just step back for a second, as I was mentioning, some years ago where there was no internet, there was no smartphone, and the conversation was that how is internet going to transform our industry? what we thought then and what happened is not 100% in line. What we did with it, I think, is much better, much, much better than what we thought. That transformation was substantial. When it comes to AI, I think it's very critical. This is an obvious one, but to really understand what do we mean by AI? Everyone has their own version of AI. We have to have a common definition as management in terms of, what does AI mean? So we have machine learning. People can understand that. You have data scientists, programmers, monitor, and if the program makes a mistake or whatever it is, it improves itself. It learns from its mistake that is made. That is easy to understand. AI, basically, what it means is that it has access to million data points, and it's going to use those million data points to make a decision. But the reason we call it AI is that we, as a programmer, as people who are run it, would not be able to tell which data points it used to arrive at the decision. That is the intelligence part, right? I'm simplifying it. Understanding those fundamentals, things like that, is very important, because then you can figure out what is the capabilities that you can use AI for your business. Identifying the problem that you want to solve, why is it we are doing this, and what is the outcome that we are trying to get becomes very critical, rather than a big thing saying that here's AI, let's use generative, chat GPT, whatever, and have them write a policy for us, for example. That's not where this benefit is. I'm very optimistic about this because I believe it has a potential to substantially improve our modeling, our risk analysis, our customer service, and most importantly, I think if it used properly, it can be a great tool for predictive modeling. That's something that our industry not so much needs. We always kind of think that we are doing it, but we do guesswork. We use actuarial data looking backwards. AI can be a tool that we can truly use to look forwards and then change some of the assumptions that we make, because it has the capability to use that million data points, use data from outside of the organization, use the data from inside the organization, and do things that we cannot do today. We're incapable of doing that today. There I see a huge improvement. So I'm very optimistic about this. A lot of conversations about, this can take over the world and things of that nature. People who run it, they can have ill intention. That can happen. But it by itself, at least the way we know it today, it cannot do that. That's not the case. So for our industry, I think using the data, segregating data, the way Andreas was mentioning, but identifying what is it that we want to solve and understanding commonly within the management, what do we mean by AI? What do we mean by machine learning? And then for our industries, we also have to keep in mind, and I mentioned that in our examples, we did it as a separate company. One of the issues is that for AI to work, we have to have really good data. In most of our cases, I'm sure it is with many companies, when you look at the data from customer side, most of the data is sitting in the note form. It's not digital. They're not fields. Everything is in the note form. So someone needs to go there and segregate it and make the data to be really useful. That's your data. AI can go and look at million data from internet globally and compare and contrast and basically come up with the solutions or whatever it is that we want it to do. That's very important. But our data, our computing capabilities, our algorithm, our understanding of computing, outside servers, cloud computing, things like that, has to be all in place to be able to capitalize on its potential. Without having our shop in order, it's a pipe dream saying that AI is going to solve problems. But I'm very optimistic that if we align it properly, it can substantially improve the services that we provide to our customers.
Andreas, did you?
Yeah, it's fascinating because you're spot on. We have to start at the point where the data sits.
Correct.
And it sits actually with the customers. But the reality is it's fragmented, it's dispersed. At best, it's a Word document or whatever, or Excel sheet at best. And to provide the tools to empower the customer to work with data, and that's why I was mentioning in my little speech this digital twin approach. Use the analogy of the industry, the manufacturing industry, automation, or automotive industry. and translate this into our world and say, find the data source, whatever format, unstructured data you have, ingest it on that platform, create your digital twin, and then you can work with scenarios where you stress test your digital twin and it informs back your organization. And there you can use AI very concretely, but to organize data is absolutely important, and to shape the data, it's absolutely important.
If I may add one more point, Nick. So in our business, generally speaking, when you look at interaction with customers, it happens when they buy the policy, happens when if they have a claim, and happens at renewal. The 3 points that we interact with the customers as insurance companies, as intermediaries, whatever. So frequency of our business, let's say, is 10%. That means that 10% of our clients, whether it be commercial or consumer, actually have a claim. So we always talk about claim service, claim service. That's very important, but only 10%, let's say, in average, experience it. At renewal, now, let's say, clients can do automatic renewal, so you have no interaction. This is a bad model in terms of customer relationship management. So we add other things that we want to do outside of insurance that can hopefully elongate that interaction with the customer. This is where AI can improve our interaction with our customers substantially. But as Andres mentioned, you have to have data. You have to understand the needs of the customer. You have to do that predictive modeling, the things that we don't do today. Not so much we don't want to, we cannot. This is where I think the big transformation using AI and technology can substantially change and create a competitive advantage for the companies that will get this right.
Yeah, I might add a provocation on top of that, actually, if I may. I spend a lot of time thinking about what does a $300 billion insurance company look like. And if you look at it, I think the ranking right now is probably Ping An, AIA, Marsh McLennan, right, in terms of the top three. Two of those, I think, are a bet on geographic growth, and one is a very large, very customer-centric, very data-rich environment. And I think this question of digitization of data and proprietary analytics, I think, is at the core of that question, Andres. The issue is always that's been the case for quite a period of time, but I see conditions building where I kind of described it to colleagues recently as you can paint the picture of a closer asymptotic future where any data that can be digitized has been digitized. Any process that can be automated has been automated. And I think in that world, you've got to think very carefully about what's the value, where does the value sit, and how is the value protected. And it is a lot around proprietary customer data and insights and underwriting analytics, I think. Yeah. There's a question there, somewhere in there, about how quickly can you follow if somebody starts to get there first, which we were discussing, Bijan, but yeah. Anyway, I do want to make sure we leave some time here for questions. So maybe if we could close out on a kind of a positive note here and then ask the audience for their input. So the question to you both is, as you look forward for the industry and for your companies, what is it you're most excited about that we haven't necessarily spent time talking on? It's indexed a little bit to the threat of AI and kind of various different things. So where's your excitement, and what are you most excited to see discussed at the conference over the next couple of days and interact with people on?
So we were talking about data, but actually, I told you we've got data information, but also people. And I'm really excited about people because for too long, our industry was reducing all efforts to develop the capabilities, the talents, leadership in our industry. If you look at the budgets over the decades, it only had one direction, it went down. And we see the impact, we see the result of it. It's a fragmented space. People make up their own curricula, and we don't have a common understanding of what an underwriter of the future looks like as an industry, what a claims handler of the future looks like, what the actuaries, etc., and the sales people look like in future. And this is a plea also for something that the International Insurance Society and the institutes are thinking about, to say, how can we bring it back to the top of the agenda? Because ultimately, it's the people, together with data and tech, yes, but it's the people who advance the industry. And we need to take this seriously. This needs real investment, it needs passion, and it needs a link to society. Because the insurance industry is critical for any society. And it also helps to close the protection gap, and it becomes then suddenly relevant again, so that investors find it even more attractive, despite, I mean, at the moment, the interest rates go up, people think like, okay, that's going in the right direction. But also that the underlying model is more sustainable, cycle resilient, and exciting for talents to come into our industry.
Excellent. Thank you.
100% agree that the way our industry is changing in terms of who we attract to come in and how we develop them, giving all the things that we talked about, I think future is very bright to be able to build a very robust industry. So the graduates from university would want to be in this industry. I don't know for I know for many of us, we are in this industry accidentally. We didn't grow up saying that I want to be an insurance person, right? So maybe that model is changing. Maybe that's something that, as we go forward, change. I totally agree with that. Where I'm excited about our industry, globally speaking, on the international side, is the fact that, especially over the past 10, 15 years, there has been a transformation whereby insurance in many countries is really looked at as a financial services industry. Many companies, many developing markets look at banking, look at investment companies, whatever, as financial services. Insurance always was a kind of a stepchild in a sense. I see that increasing in value and gaining more and more of the GDP of these countries, meaning that financial contributions that it provides, people that we employ, the way we help the SMEs as well as the corporates to do business. It was mentioned that without insurance, the trade stops. And as the developing economies grow, as the social economic side of the individuals gets better in many of the countries around the globe, I think there's a great potential for growth for us. I'm so excited about that because I think we can really help our customers to achieve their dreams and their desires, something that all of us want to do. But now I think there is a shift whereby as an industry, we have a seat at the table and we're being recognized and we can contribute to that. That I think has a huge potential going forward. And as I mentioned, I think opportunities for mergers, opportunities as some of the international players exit the markets, on the markets that we talked about, like Asia, Middle East, Latin America, creates more opportunities for us to grow our business. And again, have the local management that they know their markets, allow them to run their businesses long term and create the value that we want to create for our shareholders as well.
Excellent. Thank you both. John?
So I understand we have some questions which are magically going to appear on the screen. Here we are. So in a world where AI seeks more and more data, how do you consolidate the learnings across your companies on a decentralized model? Would you consider a hybrid model?
I'm assuming that's for me. So that's an excellent question. We are not considering hybrid model because our competitive advantage is the decentralized model that we have. Decentralized doesn't mean that everyone is disconnected. The word collaboration was used. That's very big for us. So I think there is a way that we can use the vast data that's available and, with the, consumer protection data and everything else in mind, and have some of the places whereby they can analyze data. And in terms of geography, India has great capabilities for people who do this. And then have data from different companies to be analyzed there for benefit of all companies. So there's a way to take the data from all the companies that we have that are decentralized, the part that we can take, not the personal data, analyze it and feed it back to the companies for their benefit. So there's a way kind of doing both. We don't need to do hybrid model. Companies that are centralized will have better competitive advantage than us in doing so, because in a central way they can, we talked about data and importance of it, they can do that much better than us. So in order for us to gap that, we use this model of collaboration between our companies to share data where they can.
I think the moment you define data as an asset and put a price tag to it, then you can answer all the organizational questions, whether it's decentral, central, etc. But data is an asset, and scalability is also a topic here. So in our world, it's more a global model with local representation and local staff and managers managing their markets, but we tap into a global data asset pool. Yeah, I think that's the way we look at data at the moment.
Good, thank you. We have another question. While digitalization has presented great promise in terms of direct sales, unlocking new customer segments and allowing carriers to get closer to customers, it seems like the real effects have been relatively modest. Do you see this picture changing going forward?
I don't know if, I actually, relatively modest. I think the little success that we achieved is not due to, the dream of, unlocking customer segments, etc. I think the problem really lies in how do we deploy technology and bring it into everyday's business and lives. I think it requires a pretty rigorous and disciplined approach. And we have experimented a lot, and I've seen use cases with tied agents, for instance, where we see tied agents operating in a very traditional model and suddenly being confronted by direct channels. So the reflex was immediately to say, oh, let's go to the direct channels because it will be much more successful, it will be cheaper, quicker go to market, cheaper, etc. But the reality was the stickiness of customers in that traditional model with tied agents was so superior that the tied agents suddenly tried to apply a hybrid model. They adopted certain digital tools within their agency, so it became a new agency model. And that was quite successful. So that means the original hypothesis that a direct insurance company is the one successful model didn't hold. The traditional channels were still there, and upgrading them, bringing them into the digital age was, I think, the success. So that's why that would be my answer if I read it properly.
I would like to start by saying that in our industry, the intermediary value proposition is still very strong. In many, many countries around the world, our customers more comfortable going through intermediary. I don't think that's going to go away anytime soon. To understand this question, I think if you look at, again, when you build your model from the ground up, whereby it is direct, such as GoDigit, the insurance company that we have in India, then the model works. There are no intermediaries. That's how you build your model. If you already have intermediary relationships and the business model, the digital part, as Andreas was mentioning, we have to also look at how digitalized it is from the intermediary to the customer. So that's also a benefit. So again, the point here, I think, is that if you want to do direct digital sales, what is the purpose? Is it better service? Is it faster customer service? You have to identify the purpose. I think our industry is still very much reliant on traditional model of intermediaries being involved. As a result, digital becomes an assistant, not replacement. And that's the reason why we don't see big movement there. You can see that with aggregators as well. They haven't taken over our industry because it's just another way for customer to access insurance. But it's not a replacement. I think we have some ways to go for that to happen.
I think we have time for one last question. How do you think about right-sizing your technology investment given the outlook for rapid gains from digitisation and AI? Are we moving fast enough?
I'll take that quickly. Quick answer is no, we are not. I think technology as a whole is moving much faster than our industry. If you look at how it's being deployed elsewhere, you can see that we are behind. This is where I think the issue of how do we attract the right people to our industry, and how do we look to develop our people for next 5, 10 years. Because I don't believe we're going to have underwriters the way we see today. We're not going to have claims management teams the way we see today. That needs to change. If that change happens with the right use of technology, then I would say that we are moving fast enough. But in our organizations today, we're still very, very traditional in terms of how we organize our companies, how we train our employees, how do we look at underwriting. That needs to change. If that changes and aligns with technology development, then I would say we are moving fast enough.
I would say we are underinvesting into technology. We still very often see it as a separate part of the organization. And we clearly said tech and IT and technology in general and data is part of business. So you really have to integrate it. More and more products are software related, software as a service, etc. So in our core business. So we have to embrace it. So we're underinvested. And are we moving fast enough? No, probably not. But we have a lot of good examples where companies try to revolutionize their technology base, and it failed dramatically. So eyes wide open, very disciplined, and that would be my summary.
Any last words?
No, I see we are exactly on time here.
Exactly on time. Ladies and gentlemen, please thank the panel for a fantastic opening.